Across the past 24 hours, the crypto market has unfortunately come down. We saw from yesterday's video that there was the potential for a turnaround. It would have been very early days, but unfortunately that didn't occur. In this video, I'll help to keep you focused on the charts that you need to understand. When looking at financial markets, there's a lot that you need to understand. Financial markets have so many rules. When you understand those rules, you can profit. And it can take time to learn the language of financial markets, but it's always worth it. If you're inside financial markets, one of the most important things that you can ever do is to understand the rules. You're going to find this video really helpful. Let's get into it and let's run the numbers. In the past 24 hours, Rule 225 action, Bitcoin cannot escape the stock market's gravity. Now, what exactly does this mean? And more importantly, how can I prove to you that it's actually correct? When we look at the S&P 500, the NASDAQ 500 futures, the Dow futures, and the Russell futures, we can see that the major market indexes inside the US all sold down. Now, what is that blue line? That blue line is Bitcoin. Bitcoin cannot escape the stock market's gravity. This is Rule 225 in action. This means something that could be very subtle at the start. If the stock market is coming down, expect crypto to come down. Therefore, the subtle thing is that Bitcoin's price is not determined by Bitcoin. It's determined by the stock market. That sounds horrific and shocking. A lot of people will just look into Bitcoin's price chart and say, I know exactly where Bitcoin is going. I know what drives it. It's the halving. It's something else. But the truth is, it's risk on or risk off sentiment. So then the question becomes, what drives the major market indexes? I have a free resource available to you from the homepage of CTKSmethod.org. When you just enter the homepage, just scroll down here to your cheat sheet to mastering price action. This cheat sheet is incredible, and I'll explain how. The question was, what drives the major market indexes? The answer to that question is row 1 and row 2 of the cheat sheet. We've recently seen gold and silver go utterly parabolic, and the VIX, unfortunately, it could have decayed in the past trading session. It went up. Now, what does this mean? It means that the markets are really on the knife's edge. There is rampant fear across the stock market and across crypto as well. The cheat sheet gives you an insight into structural passes and structural failures across all markets. All markets move as one, and this is one thing that most people don't understand. For example, when we were looking at the S&P 500 futures, the NASDAQ futures, the Dow futures, the Russell futures, we saw that they move lockstep with Bitcoin. One thing that's pretty hard for new people to understand is that Bitcoin's movement changes the movement of the individual alts. If Bitcoin is coming up, your individual alts, say ADA, Solana, Doge, XRP, BNB, whatever they are, they will be coming up as well. But if Bitcoin is coming down, all of your alts will come down as well. If Bitcoin comes down 1%, the alts could come down 10%. It's not surprising. We have a rule for that. That is Rule 45. No crypto alt can escape Bitcoin's gravity. That's what that means. Doing the cheat sheet each day, and you can do it several times per day, and you can do it really quickly. Inside the Profiting Masterclass, I give you the tools and the tricks and the techniques to go through this particular cheat sheet in around 5 minutes. It doesn't have to take a lot of time, but it is really important. The reason that we look through the cheat sheet, if the VIX is starting to spike up, that means that the major market indexes will go down. They will in turn drag the stock market down with it. For example, Apple, Tesla, Microsoft, Nvidia, the banking system, everything will come down. In turn, that will negatively impact the crypto market. like the alts are associated with Bitcoin. Bitcoin is associated with the stock market. If we see gold and silver going parabolic as they are right now, it means that geopolitical tension and stress is at an all-time high. This will cause movements inside Forex, the DXY, dollar yen, euro dollar, Aussie dollar. They're also important to keep your eye on. The movements inside the cheat sheet will directly influence how price moves on the daily structural model, and if we're getting structural passes and structural failures on the monthly model. They'll also dictate if our long view forecasting models actually come true or if they fail. The key of this entire process is these dotted lines that occur on the daily basis. They're formed through level 1 and level 2 standard certification. In yesterday's video, we were just about here in terms of total crypto market cap. So we saw total crypto market cap slightly recovering and then basing. When the US markets opened, they sold down and they kept on selling down. What I like to say, and I think that you can really help, this would be really helpful to you. I say that 24 hours is a very long time. So when we look at price action, know that it can move in a wave up and down and all over the place until basically the US session just makes a decision. It is pretty much that the US session decides where the markets will go. Now, of course, there's a lot more science behind this than just a wavy price. Let's just mark up this chart with level 1 and level 2 standard certification. Now, we see a couple of things. There was overhead structural resistance at that 3.76 trillion. We were about here. So we were finding all of this support inside the market, but we had to overcome this $3.76 trillion area. We tried to do it, and just pretty much as the markets open in the US, they got weaker and weaker and weaker. And we did a structural failure around this 3.7 trillion. That negative CTKS drove us down, structural overshoot, gravitational well back up, and it's failed unfortunately. So we've ended up wiping out quite a bit of value inside the crypto market, but it is all determined by either structural passes or structural failures on level 1 and level 2 standard certification. Now, these particular lines are really important. They're drawn through all of price history, so they're not recent indicative price. Recent indicative price works pretty much like this. If price printed, this becomes a key level, the only level that people watch. That is really nutty because you can see right here, there's literally no support. What you had was a structural overshoot through these levels of structural support and a rebounding. In other words, price doesn't behave as most people think it does. Institutions know this, retail does not know. The highest paid professions in the world, such as trading, all have their own knowledge base. For example, medicine is very highly paid. If you went in and got an ECG and the technician handed you the ECG readout, you would probably say, I'm not too sure what this all means. Am I okay? Am I not okay? And there's a lot of theory underneath an ECG. They look like squiggly lines, but they mean something to somebody who knows what they mean. The same is true with structure that sits underneath a price chart. For example, if we're looking at silver, silver can be marked up with level 1 and level 2 standard certification as well. So let's just pop on that indicator. What you can see around here, and that green line is the monthly target for silver. Silver has been really, really strong. We can see that silver came up through all of that structural overhead resistance and has converted it into structural support. I'm just going to draw a rectangle in here so it's easier for you to see the sub levels. Now, these are reasonably light levels, but as you come through more and more of them, they will contain price. And the further price goes up, the more it needs to consolidate. So we've seen around that 53.80 and a little bit higher around that 54.20. There's structural resistance inside the market. And Sylvia is trying to figure out, do I go higher or do I come back into this structural area? Remember, the monthly view, the long-range view models all depend on structural passes and structural failures inside the daily charts. It becomes vitally important to understand the interplay between all the different markets and how they impact the structural levels on a daily basis. If we're getting structural failures, we're likely to move towards the negative normalized price path inside the particular chart through the monthly structural models. The dashed lines that you see are called CTKS levels, and they're formed through Level 1 and Level 2 standard certification. You can see there's a bit in drawing these lines. They are not random lines. They're done scientifically, and we can also create paths based on structure before price prints, and that's what we do at the start of each and every month. We know that Bitcoin cannot escape the stock market's gravity. If the stock market is coming down, Bitcoin is coming down, and your beloved alts are bleeding. Therefore, knowing where price can print structurally before price actually does print is very important. For example, if we look at this particular chart, this is the structure on the NASDAQ. For last month, throughout September, this green line was a normalized price path to predict where the NASDAQ could go from a structural perspective. Price didn't print when this particular line was drawn. Price, when we do the paths in Level 2 standard certification, we draw it up and we do not change it. Likewise, a path has been done inside the NASDAQ and inside every single component of the cheat sheet. This way, we can understand from a three-dimensional perspective which way price is actually going. Many people will tell you a story on price. Price will always tell you the truth. Now, what is the truth of the NASDAQ at the current time? The NASDAQ is flatlining. It's going through a consolidation phase. But the key thing here, it's had structural rejection on that 23,150 level. This is an area of structure that the path told us to keep our eye open to. Another one up here around that 23,950. Also, there is structural support through this specific area. So these paths are not random. They are structural. They are done before price prints. In fact, they don't even care where price goes. They're designed specifically to talk about where normalized structural support and resistance levels are inside the price chart before price prints. I'd like to thank Let Me Know Barry, who recently reached out and said, I think folks may need some real wealth too to go along with the three-way plan. Now, a three-way plan, some may need a plausible forecasting strategy and a three-way plan in these choppy waters. Do we sink? Do we swim? Do we stay in the boat? It's okay to hold, but don't round trip it. It's okay to sell, not the whole bag. And I fear some people will do both, one side or another. CTK is prepared, never scared. There is a scientific way to answer Let Me Know Barry's question, and thank you, my friend, for that. If you would like to ask any questions, please pop them into LinkedIn or into X. Now, what we can see, if we go back to last month, we were seeing positive momentum inside the stock market. It wasn't neutral, it wasn't negative, it was positive. And this is the reason that we draw up three paths inside the service at the start of each month, because we need to just have a three-dimensional strategy, a three-way strategy. If price is going up, we're going to see it, such as this in September. If price is flatlining, we're going to see that too. And if price is decaying, we're also going to see that as well. Your strategy must always be just religiously married to price reality. If you think it should go up, but yet it's going down, You must embrace reality. If you think it should go down, yet it's going up, you must embrace price reality. Unfortunately, too many people have too many stories, and those stories will cost you in terms of losses. Abandon the story, look at reality. This will really help you out. In yesterday's video, we were around this particular point, and we saw one critical level for us to hold was the 111,350. Unfortunately, we just couldn't get above it. And when the US session opened, they sold down. And when they sold down hard. But fortunately, we do have structural support inside this level from around that 107,900 up to the 109,050. In other words, if you know where the structure is sitting inside the chart, and these areas are called SCs or Stanfield zones, they accumulate SLs, Stanfield levels, also called CTKS levels. They're the dotted levels. One thing to note, it all looks pretty much the same. When you look at this and you look at this and you look at this, you would assume that the support or resistance levels inside here are all constant. They are not. At the 111,350, that was a very key level. We lost it. It doesn't mean we're not going to regain it, but at the current time, we have lost that level. The markets have a nasty habit of when everybody thinks it's going in one direction and it's not going to stop, the market will reverse. So please bear this in mind. Also, another thing to know, if price goes up a certain amount, it's likely to retrace about 50% of that move. That's pretty much the sweet spot in terms of consolidation of gains. If markets come down, they will retrace about 50% of their loss. You can actually see it just playing out all the time. Sometimes it's 50%, sometimes it's 100%, sometimes it's 30%, but whatever it is, there is always price moving in a wave. That's why it's so important to understand the rules of the market that you're in. If you're just looking at a chart and just wildly throwing money at it, not looking at intercorrelation, interconnection, not looking or understanding how the other charts are bearing on the chart that you're putting money into, you will lose money. If you don't have a three-dimensional strategy, if you don't embrace price reality, you will lose a ton of money. This is just the learning process that everybody goes through. And some people who I would like to call tourists never get there, because the tourists will come into the market and they will say, oh, I'll just throw some money at it. It's going to go up. I'm just counting my gains as soon as I place my buy order or sell order or whatever they're doing. They're just looking at the profit. Professionals are unlike tourists. They've moved in. They've become residents. And trading is a lifelong profession. You make most of your money when price is coming down, not when it's going up. That may sound really counterintuitive, but it's absolutely correct. And please let me know your thoughts on that statement inside the comments. It's really good to talk about that. We have a lot of professional residents inside our community. It's elite. If you'd like to stop being a tourist and start being a resident and start understanding how to make money in any financial market condition, up, down, flat, it doesn't make any difference, because we have a strategy, we have an entire system. And I would like to thank Tiana, who said that she would like to encourage everybody who is serious about money, finance, and personal growth, no matter what their background or level of experience, to apply for the scholarship. Now, what is this scholarship? And thank you, Tiana. It's great to see you again, my friend. The scholarship is to the Profiting from CTKS Masterclass. It is incredible. This particular scholarship, which is near a full scholarship, will take you through all the foundations that you need for consistent profitability. It will help to unwire your thinking, which is just mainly due to retail trade perfection. You'll learn what to do when a trade turns against you. You'll learn how to make money in any market condition. you can overcome the consistent profitability barrier and gain ultimate security. It's all about understanding how financial markets work. And in week 2, we do a deep dive into that. Every single component of the cheat sheet is assessed to predict tops and bottoms. And predicting the top and bottom, for example, on gold, silver, copper, the S&P 500, the NASDAQ, Bitcoin, individual cryptos, is really important. In week 3, we put everything together for you so you can learn how to trade in any market condition. And the market conditions when I did these videos was very negative. The VIX was spiking like a mad thing. So we had pretty much the same kind of behavior in terms of price that we have right now. And I'll show you a wide variety of different trading techniques that you can apply to make money. It's very in-depth and you'll find it incredibly valuable. And in week 4, we just wrap it up with a bow and just understand that your profitability will be always determined by the market's permission for you to make money. So we always have to embrace reality. If you're sick of losing money inside financial markets, if you want to be a resident and not a tourist, if you want to learn things that you will not find anywhere else, and they're all built on a very solid understanding of financial markets. I've been inside financial markets for many, many years. All you need to do is to reach out to me directly on LinkedIn. And the scholarship, near full scholarship, it will be closing in a couple of days. So I just want to give more people an opportunity to just reach out. I would like to help as many people as I possibly can. Originally, the applications were going to close on Friday, but I want to give people just a couple of days more to express their interest because a lot of people just don't feel worthy of reaching out and getting a scholarship. I want you to know you are worthy. If you're prepared to put in the work, please contact me. And if you have family or friends who could benefit from a scholarship like this, please reach out to them and get them to directly contact me. Okay, let's go through the cheat sheet really quickly. Before you start, it's a good idea to have some context. We know that the major markets came down, they dragged Bitcoin down with it. What caused this? Row 1, the VIX, the DXY, dollar yen, 10-year, 2-year, and oil. It was the spike in the VIX. We noticed that it was flatlining. It did have the potential to come down. That would have created a broad-based rally. And unfortunately, it did the exact opposite. It went up. But we also had this potential on the table. And it's really important to think in terms of 3 dimensions. Don't just think in terms of what you want. Think in terms of what you don't want as well. Now we did see the DXY come down and also the yields come down. This could actually indicate with the yields coming down, and this is a big driver of gold. When the DXY and the yields come down, that actually puts positive price momentum inside gold and silver. It's something to do with the inverse real rates that actually push gold's price up. Now, when you see this kind of behavior, this could be the blow off before things start to come down. Now, we know that even though we got this big push up in the VIX, the next day actually came down. It rallied. If we get a similar thing occurring here, we'll get a retracement in the VIX. If it goes below halfway, that's what we want to see because it could end up decaying and that could be the top of the VIX. The jury is out so far, we just have to keep in mind, keep your eye on the VIX. The issue with the stock market is really lagging. It can take days or even weeks for things to turn around. But as soon as we see the yield starting to rise up, gold and silver will be hit with negative price momentum. We did get the starting point of the euro coming up, but the Aussie dollar went down. So just bear in mind that we need to get a lot of ticks on the box. We want to see retracements in gold and silver. These are primarily being driven by geopolitical tension. When the geopolitics comes out of the financial markets, the markets like to rally. Keeping your eye on the cheat sheet is wildly important. So even though we got strength in the euro, it was not confirmed by the Aussie dollar. It was also not confirmed by retracements in silver and gold, which meant that this kind of behavior was on the cards. Please let me know in the comments, what does your cheat sheet tell you for the next 24 hours? And of course, people are doing the cheat sheet throughout the entire world. Some people do the cheat sheet when other people are asleep and vice versa. Now, when we look at row 3, which is the S&P 500, the Dow Jones Industrial, the NASDAQ Comp, and the Russell, we know the VIX spiked up, so a degree of retracement inside the VIX will be very normal. That means a degree of retracement inside the major market indexes will also be normal. But remember, all of the world interprets price differently. We're going to have Asia coming online, then Europe, Middle East, all sorts of things will be happening. So just keep an eye on price. Just embrace the price reality. And what do we see here? The NASDAQ, for example, the NASDAQ was getting a little bit weaker. The S&P is weaker than the NASDAQ. The Dow is about the same. And the Russell started to break out but got whacked in the head, because when the major markets come down, that's a signal the Russell needs to follow. Looking below the major indexes into row 4, which is Apple, Microsoft, Nvidia, Tesla, and Strategy, we can see that Apple is under negative price momentum, but it could be staging a little bit of either a consolidation or a very early turnaround. This is great stuff. What about Tesla? It's in a downtrend, but it's currently consolidating. If it can break above that 442, we can have a reversal inside the markets. A lot of people won't be expecting that. They'll be expecting that the markets will go down. And this is kind of just like a survivorship bias. People say if it's going down, it will continue to go down forever. And if it's going up, it will continue to go up forever. Both are false. And let's have a look at Microsoft. Microsoft under pressure and still under pressure. It's looking weak. What about Nvidia? Nvidia is important. This does not look constructive. What about Strategy? Strategy is in a downtrend, definitely. This will depend on not only Bitcoin, but also the major market indexes. Strategy has a foot in both camps. After the major sell-off, people were getting really excited. They were saying, it's going to go parabolic. The bull run has started. It's flushed out all the longs. It's repaired market structure. Everything is fantastic and it's going to go up. And the video I put out, it's not over. Please make sure you have a look at that video because it's about rare earth. It's quite a good deal of research went into that video for you as well. So when we look at price, we could expect a retracement back to the 100,000. Now, if price retraces back to the 100,000, we could see a lot of these wicks kind of get filled. I doubt we're going to see this kind of wick behavior inside the markets, but you never know. But I don't think it's likely. I think it was just a push out. One of the things to just bear in mind, the crypto market was very weak because, according to cycle theory, the crypto market could have been over, which meant all the tourists would pack up and be drawn back in at the top of the next bull run. Unfortunately, financial tourists leave decimated, so you don't want to be a tourist at any time. You need to be a resident. And if you're serious, this is the home of the best residents inside financial markets right across literally every financial market. Our community is just awesome. Now, one thing that I believe we can see in the next 24 hours, the shorts will be getting very, very excited. They will just say, this tip on price action, it's guaranteed. If it's guaranteed, it won't happen. Popping into row 6, which is Litecoin, Bitcoin Cash, Binance Coin, and Ethereum Classic. We know that all of these alts will follow Bitcoin. If Bitcoin is selling down, we know the alts can sell down wildly. Now, we've seen a very big retracement in Bitcoin, but not the same internal volatility that we saw originally. So that's very constructive. When we look at Bitcoin Cash, it's coming back to that lower range. We're seeing a little bit of weakness inside Litecoin, definitely. What about inside Binance Coin? Binance Coin is an animal. It's an absolute animal. It's doing incredibly well. What about Ethereum Classic? Well, it's just pulling back. Now remember, if the VIX collapses, all markets will rally, and all the shorts that are absolutely positive, because this is a daily basis, we've seen 3 days of red, the shorts will now likely just pick up their confidence to extreme measures, extreme levels, like we often see. Here's this, okay, 1, 2, 3, 4 days of red. It's an absolute sure thing, and they get wiped out. Just please bear this in mind. Absolute sure things do not exist in a market that moves in a wave. Always up and down, up and down. We need to get a break of trend. We're not seeing one just yet, but please don't get too negative. We don't do this, but other social media influencers will get really negative as price gets really negative. They'll say it's the end of the world, the crash is incoming, it's 1929, just you name it. And then all of a sudden price reverses and their subscribers, their people, are left with massive losses. You do not want to just get into the market when everything is going green and get out of the market when everything is going red. This is tourist behavior. You cannot afford to be a tourist inside financial markets. You must be a resident. Right now, all the tourists are screaming that the sites and attractions are all closed. They came into the market expecting that there was going to be a really good upswing, but they got a downswing. And right when they sell, their attractions came back online. Please let me know what you think of the tourist idea. I basically just thought about it today. I think it's a really good way to explain how people just absolutely decimate themselves by just not committing. There's so many people. How hard do you work for your money? It's so hard to get the damn stuff. And how easy is it for the markets to take that money, especially if you get pulled in like a tourist on the green fire, only to understand that that tourism gets wiped out. You don't want to be a tourist inside the market. When we're looking at Solana did really well. It didn't have any massive spikes down. There was really good liquidity sitting inside Solana, and we've seen a bit of a retracement, but it's not too bad. If the VIX starts to decay and the yields start to come up, which puts a bit of a negative pressure on gold and silver, we'll get capital transfers across to the crypto market, across to the stock market. Now, if that occurs, that's really good because Solana will definitely benefit. If we can get a break of trend through here, that's fantastic. It's not happening right now, but you need to keep your eye open for it. Always have your three-dimensional strategies. Know what you will do if price goes up like this. Price goes up, know what you will do if price comes down like this. Know what you will do if price goes flat like this. This is not some esoteric theory. This is absolute core behaviors that you need to master inside the markets. That Profiting Masterclass will be a game changer for you. Remember, the shorts are getting really, really excited right now. They may get a bit of follow through, so just be aware that price could go negative, because when the US market sells down, it generally impacts the markets for about 24 hours. That's a little nugget for you. I would love for you to become part of our global family. All you need to do is smash that like button, subscribe, press the notification bell, and just drop a comment to say hi. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading is a lifelong profession. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that buying lower is the secret to success. You will create security and financial freedom in direct proportion to your capability and willingness to learn. If you commit, your world will improve immediately. I hope you've enjoyed this video, and Kate and I very much look forward to joining you again in the next one. Take care, be kind to yourself, be kind to others, show gratitude and happiness, and you'll already feel richer today. And today is all we ever really have.